It's quickly become a space where holders can find decent yield at a time when traditional savings accounts pay almost nothing. In fact, blockchain-based platform Celsius is offering a 6% yield on up to 5 Bitcoin and 3.5% after that. But what happens when prices drop, activity cools, or regulators come calling? Joining me now is Celsius founder and CEO Alex Mashinsky. Alex, it's great to have you here. How does this work?
Sure. The customers can basically download a wallet from the Apple or the Android store and deposit up to 42 different assets, including Bitcoin, Ethereum, stable coins like USDC, which earns 8.8%. You don't have to do anything. You get paid yield every Monday. And, it's just, we do all the hard work. We basically create yield from institutional investors, exchanges, DeFi, as well as lending to retail customers, lending margin borrowed for retail customers.
How do you create yield? And how is it that by doing nothing, I can hold the USDC stablecoin and earn 8%?
So Celsius created this category back in 2018. Now there's probably close to 50 companies offering that, including Coinbase and others. Yield is all around us, right? Basically, there's always somebody who needs to borrow the asset, Bitcoin or Ethereum or a stable coin, and they're willing to pay a higher rate. Celsius just gives most of that back to our users, to the people who have lent us those assets in the first place.
Yesterday, New Jersey cracked down on BlockFi. I don't know if you would consider yourselves exactly the same, but here's what they said. I wonder if it would apply to using a platform like Celsius. They issued a cease and desist order against BlockFi, which is headquartered in New Jersey, saying they can no longer sell unregistered securities in the form of interest-earning cryptocurrency accounts. The regulators also warned other DeFi platforms, saying they, quote, present a heightened risk of loss to investors, but aren't protected like the FDIC for bank insurance or the SIPC as with brokerage accounts. Wouldn't this kind of regulatory crackdown apply to Celsius at some point?
Well, so we are not in the business of selling you coins. We don't try to sell you Bitcoin or Ethereum or stablecoin. Our job is just to earn yield on assets you already have. So we also work closely with regulators all over the world. We've been around longer than all these companies you're talking about. And I think we're fully compliant, or we do everything we need to do to stay compliant in all the jurisdictions we operate. We operate in over 170 countries worldwide. We manage over 15 billion in assets. So we're not just a fly-by-night company that started yesterday. And you mentioned before this segment, you mentioned Core Scientific. Celsius is one of the large investors in Core Scientific. We are one of the large miners in North America. So we also create yield by effectively mining Bitcoin and by creating Bitcoin or minting Bitcoin right out of the blockchain. Mm-hmm. So our diverse sources of yield are very different than what BlockFi or other people do. They're relying on securities to create some of their yield, which is very different than what Celsius does.
Shepard Smith here. Thanks for watching CNBC on YouTube.